Now, in the long-term care world, a cost of living rider is before you go into benefit. But in the disability world, a cost of living rider kicks in after you've been disabled for a year. It's tied to the consumer price index with all carriers, and you buy a set maximum. We have two available, 3% or 6%. But again, remember, a COLA rider in the disability business doesn't affect your benefit until you've been disabled for 1 year, and then it adjusted by the consumer price index, maximum 3% or maximum 6%. I think it's a very expensive rider. I don't use it when someone's 50 years old. The load is relatively high. It's 12.5% for a 3% COLA. It's 24% for a 6% COLA. And that's typical in the disability business. It's a high cost item. It's the first thing I pull off when I'm trying to work with a client and make coverage affordable. I think you're better off pulling the rider off versus lowering the monthly benefit and keeping the rider on. Because most disability claims that have a cost of living rider on them usually go anywhere between 3 and 4 years. So a client is not getting very much of an adjustment at all during that period of time. And what was the cost of living rider? What was the consumer price index change for last year? It was 0. So again, I'm not a huge believer. I think if you're in your 30s and you're a doctor making $350,000, I'm going to put this on. But if I'm talking to a 45-year-old salesperson, I'm probably going to show the rider and then let them determine whether they want it or not based on the cost. I'm going to skip that rider. The residual disability rider is an option for Principal. Some of our competitors have it built in. The residual pays when you go back to work on a part-time basis and are suffering a loss of income. It's an important rider. I use it in every situation possible. It adds about 20% to the cost of a disability policy. But a lot of claims start out on a residual basis. For example, we have a lady who has Parkinson's. She's had to slow down her practice. She's an insurance agent. She's never been totally disabled, but she had the residual benefit on her policy. Now we pay her about 50% of her monthly benefit. There are different ways that carriers calculate what the residual benefit is during the first year. We do it differently than, say, for example, Standard. But Guardian and Principal have a much more liberal residual definition during the first year of disability. Reach out to Pravada and they can help you with those differences. We have comparisons against Standard and Guardian and other carriers, especially when it comes to residual. You'll find that in most cases, against Standard, we're going to pay twice the monthly benefit they are during the first year of disability on the way we calculate our formulas. And again, I only have 30 minutes this morning, so I'm just going to go quickly over that. Reach out. We can tell you the differences with carriers. We do have a couple other residual riders that are available. We have a 6-month residual or we have a 12-month residual. So again, when you're trying to make coverage affordable for a client, sometimes you might want to use a 12-month residual. To give you the idea of pricing, the 6-month residual is only a 3% load. The 12-month residual is only a 6% load. So for example, the other day I had someone making $40,000. We needed really to fit disability into the budget. So instead of using a residual rider that would pay to age 65, we used a residual rider that would pay for 12 months, save them a substantial amount of income. Most residual claims don't go beyond 12 months. But again, this was a cost savings for them, and it really helped them make the determination about buying disability income. You've got to show options with clients these days, especially in today's economy. I think people are very concerned about making sure that the mortgage is paid and the food is on the table. But when it comes down to it, you've got to make this stuff affordable. You've got to show a lot of different options. And that's what this product really provides, is a lot of different options that really lower the cost of coverage that makes sense to the client. The regular occupation rider, this is our true ONOC rider. What this rider does, it allows someone who's disabled to go into a new occupation and make 5 times as much. For example, you had a doctor who becomes sick or hurt. They go out and they sell real estate. They can make 5 times as much selling real estate. The load for this rider is about 20%. I don't use it that often because if you look at people that are working new occupations, there are very few people that go to work in new occupations. In fact, the industry statistic is like 0.00001%. Most people, if they're sick or hurt, they choose not to work, they're paid their benefit, they don't go out and get new jobs. Even physicians don't go out and get new jobs, new occupations. They either return to their own occupation or they're severely disabled where they choose not to work in another occupation. They simply can't. But if a client does want the regular occupation rider, we have it available for certain occupations, 5A and 5AM doctors. 5A would be like an attorney or executive. But again, I don't use it for those occupations because those folks do not return to new occupations. I might use it for a 5AM doctor who wants a true ONOC definition, but again, even they don't return to new occupations. The transitional occupation rider, real briefly, is kind of like in the middle between the your occupation and the regular occupation. This rider allows someone to return to work, and between their new income and their new occupation and their disability benefit, they can make 100% of their prior earnings. So for example, take a doctor who's making $300,000. Oops, sorry about that. A doctor making $300,000. They buy $12,750 of monthly benefit from us. They can make $12,250, $147,000 in a new occupation, and we still pay the full benefit. So we'll use this on certain occupational classes of doctors. So you'll see that when you call in for proposals with Privada. Again, our pricing against Guardian, using Guardian or Standard, we're still, again, 19, 20-something% below their pricing using this rider. I think it makes sense in a lot of occupations. So additional policy benefits, most carriers have these, so I'm going to quickly go through that. I want to get into our different sales programs. We have a new program called DI Retirement Security, and we're going to have another seminar in the future, but really briefly what this product does, on top of your disability benefits, say I'm capped out, I bought the maximum amount of disability benefit, say $15,000 of monthly benefit. This is going to provide additional benefits on top of the $15,000 that goes into a trust. So you can buy up to 15% more income that goes into a trust that really kind of replaces your income after age 65. Because say, for example, I become disabled at 50, we can put $41.25 of monthly benefit into a trust, and the $41.50 builds up over a period of time all the way through age 65. So you have a big bag of money for retirement. Because what happens when you become 50, you become disabled at 50, you can no longer really contribute to retirement plans. So this replaces that lost income that's going to retirement plans by going into a trust that's already been set up by Principal. Real quickly, we have association programs. For those of you out there that work with associations like a local bar association, a trial association, a physicians association, if we get an endorsement from that association, we can provide their members a discount up to 10% off the cost of individual disability or our retirement program. So if you're working with associations, reach out to us. We've already picked up about 3 or 4 in the state of California, and we've only had this program since really the beginning of February, and we've already got several endorsements. So if you do work with associations, reach out to us so we can discuss those. We do still have our Simplified DI program, and what that does allows us to write certain amounts of monthly benefit with no blood, urine, or tax returns. The limits are $3,000 for a single life, $5,000 for what we call a multi-life, 3 lives or more, no blood, no urine, no EKGs, and more importantly, no tax return. So it fits a lot of situations. I had a call from a producer a couple of days ago, said, hey Jim, I got this guy who's making about $55,000. However, his 1040 for 2010 isn't done. 09 is not going to show much income because he started his business in 09. What can we do? We use the Simplified DI program, stated income only, no blood, no urine. We issued the policy in 48 hours after we had received the tele-app interview and the application. So it's our normal underwriting limits, $3,000. You don't need any of this stuff. And again, we'll tell you that when you call in. Multi-life discount. Anytime where you have an employer, you have an employer and you sell 3 individual policies, you've got discounts available. 3 lives or more. The discount is 20% off of unisex rates. So what this does, it really makes coverage affordable for females. It's about a 40% discount because we blend a male and a female rate. So 40% discount for females and about a 15% discount for males. So again, think of situations where you've got clients. Always ask, who do they work for, and is there an opportunity to sell 2 more people in that company? It's a completely voluntary program. The discounts are retro, up to a year. So if you sell that first person and then they give you referrals to 2 other people in that company, then we can go ahead and apply the discount retroactively to that first person. Then the discount set up permanently for that particular company. You do not have to go through company payroll, and you do not have to have anything signed by the employer like some of our competitors. So it's really easy to set up multi-life programs. I would always find out with clients who do they work for and how many employees are in that particular company, because this is an incredible referral program. I can save you 40% if you introduce me to 2 other people in your company. Who wouldn't give you names? Who wouldn't give you really, really incredible referrals to these folks through the multi-life discount program? Now I'm going to skip these. And again, this slide shows you what happens when we offer people really choices. You can have comprehensive coverage that's going to cost somebody $106 a month, or you can design a plan for $28 a month. A lot of flexibility with the riders that you put on the policies. This one shows, again, the comprehensive policy is the most expensive policy money can buy. I'm talking to somebody who's making $40,000 a year. They're not going to afford $106 a month. But can they afford $53? Absolutely. So again, show them options. And we even have spreadsheets like this that we can help you with to show them the importance of having an income protection plan to make sure they pay their mortgage, they can put food on the table, and keep their car. And that's the minimum amount of protection a person needs. But again, you have a lot of flexibility with these products in and out of California, really to meet the budget needs of your clients. The needs and budgets of your clients. With that, I'm going to kind of really skip compensation because I'm running out of time, and I do want to take some questions. I apologize for that slide. But again, if you need a proposal, reach out to newbusiness@provada.com or just call Provada, and they can help you. Call Bob, Nikel, or anyone at Provada, and they can help you with your individual disability needs. And with that, we can open up to questions.
Thanks, Jim. Like Jim said, now we do. If you have any questions or anything, you can either type them in the box or you can unmute your phone by pressing *6. It looks like we had one question.
I think we got this. Yeah. I think we answered that one. This product is for both outside and inside California.
Okay.
Okay. Any other questions out there this morning? Okay. With that, again, we appreciate the opportunity to talk to you this morning. If you need any materials, copies of these slides, if you need a flyer on the highlights of our products, information about how the definitions work, if you need materials on prospecting, prospecting letters, prospecting emails, any of that stuff, visit us. We have tons of materials available to do that. If you need to set up a marketing campaign, reach out to us. We can certainly help with that too. So with that, I'm going to go ahead and hang up, and I appreciate your time, and good luck with your disability income sales for this year, and have a great day.